Hello, welcome to this month's video. I'm going to cover a little bit about the outlook for investments, where we are in the cycle, what I think is happening now and what's going to happen next. But mainly I'm going to focus on a particular area of risk that is very important for investors today, and that is duration. Now, most people watching this video probably don't know what duration is, but it's extremely important right now, and it is impacting people's portfolios in quite a major way. But the concept is actually very simple. Duration is the number of years based on the amount of money you've put in and the cash flows that you get back from an investment it takes you to get your money back. It can vary from overnight to 50 years. The longer the duration, the higher the risk. Often the higher the return, but the higher the risk. And the risks that are impacted by duration are incredibly important right now. There are two basic things. One is event risk. So you might have a recession, a change of laws. Anything could happen between today and when you get your money back. The more time there is, the more time there is for bad things to happen. And the second thing is interest rate risk. The higher interest rates are, the less money in the future is worth to you today. And with interest rates having risen so much in the last 2 years, in the UK they've risen from 20-year gilt yields have risen from 0.5% to 2.2% in the last 2 years. This is having a big squeeze on assets which are affected by duration. Now, based on our understanding of what's happening in the world, there are two factors which mean duration is going to continue to be a big factor for investors. One is we think inflation is going to be persistent. Commodities are in very short supply. There's still a lot of excess demand in the world, so we should expect high inflation, and therefore we should expect higher interest rates. And the second thing is central banks, in their efforts to control inflation, are tightening interest rates and cutting back on quantitative easing. And those things, alongside the energy crisis that we have, are likely to lead to a recession or an event. So what we're seeing in portfolios is high duration investments like growth stocks, high multiple growth stocks in the stock market, or even high duration bonds. They're being hit quite hard, and it's really important to control duration if you want to control risk today. So where does that leave us in terms of our overall portfolios and where we are in terms of the likely investment outlook? If you've been watching these videos for a while, you'll know that we think this year, 2022, is going to be quite difficult, and we still believe that strongly. So what we're doing in the portfolios is we're really defensive. So we're underweight equities and we're very much underweight risk compared to other people. And we think we're going to get much better opportunities to buy risk assets to generate returns for people over the next few years. Now, we are seeing a lot of movement in month to month. Sometimes the markets fall, sometimes they rise. Every time markets rise, right now, we think it's really, frankly, a bear market rally. So some positive performance during a sort of medium-term down move in the markets. So nothing's changed in our outlook. We're very cautious, and we think we can use the problems that are coming to generate great returns over the next 10 years. If you have any questions about anything I've talked about today, please do get in touch. If you like what we talk about, you'd like to follow us, please click on the Flying Colours logo here and you'll automatically follow what we put out. And lastly, as always, I must remind you, I've been talking about investments, and with investments, your capital is at risk. Thank you.